Hey, this is Danielle. Welcome to today's episode of your Daily Five. So, I think one of the primary questions that everybody keeps asking here is it really possible for the indexes to keep going higher with the run that they have had? And I'm here to tell you that, I mean, number one, I am an aggressive trader, trade options. Usually I'm in and out of trades either intraday or within the next 2 to 3 weeks. So keep in mind, this is not from a long term investing standpoint, though I do that as well. But the question here is, can we keep trading this higher even though it's had this massive move since October? And, for me personally, when I get into these moments in time, I do want to lower my size a bit. I don't want to be too risky, too crazy because we are a bit extended. But at the same time, I like to trade relative strength and I like to stay with the trend until the trend ends. And as you can see, based off of this chart, the trend, my friends, has not ended. And what is glorious right here is that we have another squeeze and we also have seasonality going into April. So I'm just going to keep trading my setups. When you look at the QQQs, obviously what the NASDAQ does is going to be critical for the rest of the market. And if the NASDAQ is in a squeeze, which means it's consolidating and it's building up energy and it's getting ready to break out, that means that I want to look at other NASDAQ tickers that I can trade as well. So, anytime I get a squeeze, especially in the context of a very nice bullish trend, generally that squeeze is going to break out in the direction of the trend. Now, can it happen where things fall apart and it fires to the downside? Yeah, of course that can happen. It's not like 100% thing. Um, but as of right now, all factors are still pointing to the upside. So with the Qs right here, going into April, you have to keep in mind that there's an earnings season coming up. And so generally, when you have the Magnificent Seven stocks that are going to be reporting earnings here in April, um, you generally have a continued bullish move going into that report. Now, the last video I made, I was talking about a couple of these squeezes in the major NASDAQ names. All of those have already fired and pretty much made targets. So I will say that, you know, it's possible gets a little bit frothy here and we just keep consolidating, but I doubt it because it's April. It's a pretty seasonally bullish time. So I've already had Meta and Microsoft meet some of those targets, and then we've also had Netflix meet some of those targets as well, but I still think there's a little bit more to go. So what are some setups that I'm looking at right now? Well, I'm going to start with some wild ones. SMCI has been absolutely crazy this year. And the question is always, well, can it really keep going? And when you're a trader and you're trying to trade momentum and you're trying to trade relative strength, looking at these kind of tickers does make sense because, especially when you're trading options, you need something that's going to make a greater than expected move for you to make money on your options. So, with SMCI, definitely a more volatile name, but it's got my setup. So if you look and you see, your last earnings report, things were very, very good after earnings. You always want to keep in mind, what the stock does after earnings because that just is indicative of the optimism for the future. And so with SMCI, this was all the rage at the beginning of the year. And you'll notice that it has since just kind of consolidated. It's consolidated, it's hanging out. This is the time where you want to be looking at a stock and trying to figure out, is it going to break out again? Because when all the news cycles forget about it, that's where it's building up that pressure, building up that energy. And that's where you can build up a position before it gets ready to go on the next run higher. So we've got a little bit of a cup and handle pattern here. We're holding up above the 34 EMA, up above the 21 EMA. I like a price target up at 1250, and then after that, you're going to get closer to about 1400. So I think with this one, as long as it stays up above, say 925 or so, that will be a sign that I can continue to trade this up into a return to the previous high at 1250, and then up into about 1400. So I like that one. The next one that I'm looking at is going to be another wild one. So this one, ARM, recent IPO, actually was doing pretty well for an IPO. And then we had an earnings report come out. And again, you have that same setup where you have an earnings report, you have a major breakaway gap, you have this high momentum, everybody's looking at it right here. But then it kind of falls out of the news cycle. And what happens is that it squeezes and it consolidates and it trades back and forth, and it's not really doing anything. And this is usually the best time to be building up a position because you want to be in before that consolidation breaks out. So with ARM right here, trading about 126, you can see where that previous high is at about 150. The next level is going to be, the previous high is all the way up here, but I'm looking at the bodies of the candle because you can see that's where that critical area of resistance is, and that's also where the key psychological value is. So that's why I like 150 as a price target. But ultimately, with that squeeze firing, I would like to see it up into 165 or so. So with this one, obviously I mentioned SMCI is not a long-term investment for me at that level. I wouldn't mind buying some ARM shares at 126. I know that it's, obviously up a lot more than it was, but as far as a long-term stock play, I'm always looking for stocks to buy in my kids' account. So I actually wouldn't mind buying shares of that. But as far as a trade, I think 165 will make sense. Another one I wanted to discuss is going to be CrowdStrike. So this one has been on a big run as well. This is one that, probably wouldn't be buying shares after it already had this massive run. But as far as trading it is concerned, you have the setup. You have an earnings report, major gap. The gap did come back. Didn't, well, I guess it did fill. But when you look at it, when it pulled back, it held the 34 EMA on the daily chart really well. You're just continuing to consolidate and you're continuing to squeeze. So when you have a squeeze like that, it's a great time to build up a position, trade the ticker back up into this key psychological value at 350. And then after that, return back up into this high, which would be about 365 or so. So I do like that quite a bit. Now, of course, these are all aggressive tickers, so please do not go and load the boat on all of these. Like I said, they are a little bit more on the wild side, but generally with my trading strategies, I work really hard to control risk. I trade generally like small, I would say small, low risk. I trade like 2% of my account per trade. So, and that's what I do, focusing on trading options with these names to the upside on like a 2 to 3 week basis. So the last one I wanted to talk about is not as wild, but also has a great setup. So when you look at Eli Lilly, the reason why I like this one is because, they've just been on fire with their weight loss drugs. If you look at, again, the last earnings report, you can see that after this last earnings report, you had a breakaway gap, never came back to fill. And there was a lot of excitement around that, right? But then guess what happens? It consolidates. So it's always a better time to be getting into a stock when it's consolidating, when it's not really doing much, when nobody's paying attention. Because if you look, for example, at this last squeeze right here, nobody's paying attention, boom, boom, boom. So I love trading the squeeze. You can, find the squeeze on StockCharts. You can trade the squeeze on any time frame. You can use it on a daily time frame. You can use it on a 195-minute time frame, just basically half a day. We do have a squeeze there as well. Whenever you have squeezes on multiple time frames, that generally makes them move even stronger. So I do like that quite a bit. But in order to use technical analysis to get into critical plays, it's really important to have the right tools. So join StockCharts and you can use the squeeze. You can look at these setups. And also, if you follow me on YouTube, you can learn more about my trading strategies. So my handle is at Trader Danielle, Danielle. This is my page. Check it out. And during this series, I go over different trades that I've had on, why they worked, how they worked, if they didn't work. You can learn more about me. All right. Hope you have a great rest of your day, and I'll see you in the next one.